Hi everyone, thanks for checking out my channel. I'm going to have a look tonight at WTI crude oil, having a look at the market, a bit about what happened last week, having a look at the court report outcome, some fundamentals, and where we could see the price heading for the coming weeks. So yeah, let's get started. Having a look first at the bullish argument that why the price could actually continue to move higher. I'll get started with the last week massive inventory drop. Gasoline was down as well. Now the question is, was it linked to the imports down significantly? And partially yes, I suppose, but also the demand is definitely picking up as well, showing strength. So that's definitely supporting the price and explaining why we're still sitting above $40 and definitely a bullish argument. Now we also had the Libya export that's been stopped again. I mean, didn't really resume, but that's still off the table. So that's definitely leaving a little bit of pressure on the price as well. Also, we're looking at the court report. We could see an increasing open interest for quite the first time, I think, for quite a while in the court report when we had the up move. We can see here, zooming on the 4 hours, that during that time so was relatively up, not much, 39.5, finishing above 40, so about $1 up, but really strong open interest on this, so that's supporting the price and supporting the continuation of the move up. Although it didn't actually follow through the week after, but definitely that's something rather bullish and not pointing to the end of the trend yet. Also very important, we're still having the daily 20 MA in support, so that's been in support since the start of that move, as we can see, or at least when we did actually start to lose a little bit of momentum, then we could see that the 20 MA was in support. That's pointing to the algos very likely buying that level automatically. Will it continue? Don't know, but this is definitely supporting the price and stopping any attempt to actually break lower at that point. So to me, that's the four bullish points we're having. So I'll be moving now on to the bearish side, which I think is a little bit stronger, but understanding that's definitely trading a little bit ahead of a potential reversal, so it carries risk, of course. The first one is fundamental. I think we had from the last week confirmation that the US, that OPEC and Russia production are going to ramp up in August. Not officially for the US, but I think it will be the consequence of having more rigs in operation. As we can see, I didn't actually write it here, but the US, we had 10 rigs added to the count, so that's definitely pointing for increase in production. The OPEC will have to also increase production again, as the volume means revenue, and these countries definitely need it. And Russia, mainly not necessarily because of the revenue, but more for market share. And I believe they will follow through this increase. Of course, they will keep that in check should the price start going down significantly, but it will actually put some sailing to the price. Also, we're having from Iran some storage running near capacity, so that could mean they will have to find some options to export. Of course, they are still not allowed to do so, but still it will cause some oversupply to actually go and find storage somewhere else, and it could add some pressure to the overall price, so keeping an eye on this. Of course, we have some COVID-19 activities linked to in the US with the demand that could be at threat, but as we could see, the market doesn't care much about this so far until we start talking about lockdown and things like this. I don't believe it will be such a major thing for the price, but again, I will put a sailing and stop any significant move to the upside. Now we just spoke about the increasing open interest for the week before, quite significant, but also we had over the last few days major falling open interest with minus 28k, which is quite a lot for just 3 days trading. Looking here, and that's could be pointing to an exhaustion of the move. This is also combined with the spread increasing to 0.5 between August and September, when it was actually near zero before. So not proper contango and very putting a lot of pressure, but still a sign that potentially some storage could be seen as becoming again some issues to the market, or in any case that switching from contract to the other is seeing a little bit less attractive somehow. So also bearish. Now looking at the technical, we're still having a daily divergence in place, so it was pointing down for quite a while now. It is quite obvious when we zoom in. We made no 2, 3 and the fourth touch last week, so that could be pointing to a major reversal should that actually get validated. There's a bit of room to move up and make another 5 touch on 41, and of course should we break 41, then it will get invalidated and we would see potentially the momentum picking up and going much higher. Then it will invalidate the figure altogether. Daily divergence don't get actually invalidated just like this, especially after making so many touches on it, but we will see. Next week will be probably telling us a bit more about this. Also we're having the daily 200 MA at 43 plus running here, so it's not too far away. Little incentive to actually go chase up that move, but of course still a possibility that we could go there, and then the short entry would be more on the 43. We'll have to definitely give up short position should we actually break that level convincingly. Also yes, the 41 is a major resistance. Of course we've seen that for quite a while now, since that rejection we had mid June, and then it's been about a month that we're struggling to actually get there. Struggling or accumulating can be seen two ways, of course, and which is why I'm not actually discarding entirely to enter long on WTI. Moving now to the plane, I will actually have a preference for shorting the market for now, mainly because of fundamentals reason, but also the timing might actually be right in terms of exhaustion of the move and the daily divergence. And so I'm holding short position that I did accumulate under 41 and under the trend line, and I will keep stop loss should we break higher here, probably 65 on the RSI, and of course here if we should break the 41.5 convincingly, I definitely exit that trade and potentially re-enter a little bit higher. And now coming to the plan 2, should that actually materialize and break about 41.5, I would open long entry with stop loss below 41 for a target that would be at 43 plus, because I believe it breaking above the daily 200 MA will be very difficult, if not really impossible almost in the current environment. We need some massive improvement to see the price moving much higher, but probably not safe to keep short position accumulating from 41. That's just too far away, so I'll probably exit should we break higher and consider entering long. So should we break higher, so be zooming a bit closer. Should we break higher, we are unlikely to reach to the 43 straight away. I go like this, and we will have a chance to re-enter potentially on that trend line for the move to go up there. So potentially the short position might be either exited here, but ideally would wait for a pullback down around 40. I could exit break even and load short position should we see a nice signal underneath here. So careful with false breakouts that could happen, and of course the price could reverse entirely and go down much lower and go to the target. So target 1 is 37 and target 2 is 34. That will still be in an uptrend. Should we even do this, because we'll have okay, 33 would actually threaten the uptrend, but we still make a higher low somehow. Should we actually close somewhere around 36? So it's not actually proper and complete reversal, but more that the price is actually starting to move more in a range sort of manner from here to here and resuming there, and we'll be trading something like this should that be the case. And I believe, given the economy at the moment, the state it is, if there's no major changes, we're going to range bound between these two large limits, and this might be actually quite interesting to trade moving forward. So yeah, that's about it. I hope you enjoyed the video. I wish you safe trading, success, and I speak to you soon. Bye.